Good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick from the Cusick Group Securities Off My Money Block, and it is July 19th, and yet another record-setting day across the board. S&Ps, the Russell 2000, the NASDAQ, Dow Jones. Been in this business for now 20-plus years, and this has been one of the most amazing runs that I have ever seen in my trading career. As a matter of fact, taking a look at the volatility index, went out at 980. Just to put this in context, this is the fifth lowest close in the VIX in 25 years. Needless to say, this market, if you're not long, you're wrong. But the Dow Jones finishing up 66, and that is despite, and this is what just boggles my mind, not so much the fact that the Dow Jones is at testing new record levels, but the fact of the matter is it was up 66, and one of the behemoths in the Dow 30, IBM, used to be a darling. On the floor, we used to say, sell at 180 and buy a Mercedes. It seems like it's been stuck in this range of between 152 and 156, as you can see. God knows for how long, but this has been a precipitous drop from its highs back when we saw in April at 180. Sell at 180 and buy a Mercedes. It was an adage that worked on the floor, and, well, boy, you could have bought a Mercedes, a couple of them by now. Trading at 147, and the Dow Jones is up. Back in the day, if IBM was down 5 points, the market was in a spiral, but not today. Taking a look at the S&P 500, it was up 13. Some great action here in the S&Ps. Continue to see that finance is moving to the upside. You also had energies moving up to the upside, which is the two biggest catalysts in the S&Ps, as well as some large cap tech. But there's something notable I want to point out here. Let's take a look at the volatility indices, and there's two components I'm putting up there. The blue line is the SVXY. That's the one times inverse. It moves inverse to volatility. So if volatility goes up, this SVXY goes down. If volatility goes down, SVXY goes up. And as you can see, this thing has been going straight up, as has the market. You can see that the S&Ps have been going up as well. This is the gap between SVX and the S&Ps versus volatility. This is a ginormous gap, one that I'm watching very closely. You can see that there has been some previous spikes in volatility. When that happens, the market's going down and SVXY goes down. Currently, in full disclosure, I do have my clients in SVXY. But the point being is that we're starting to see this huge divergence between volatility and the market. Volatility at historic lows and the market at historic highs. It's mind-boggling, to say the least. A lot of complacency out there. Not to say that the earnings and so forth haven't justified it, but it is amazing. I just want to basically put that picture out there. The NASDAQ trading up 36. Large cap tech continues to move to the upside, and you can clearly see that the bulls are in control. We're seeing all-time highs on the NASDAQ, and this is amazing. It's an amazing run, and one that has not taken a breath. You're also seeing Russell 2000, similar action there. Small caps continue to move to the upside. In full disclosure, I am positioned, and my clients are positioned in the small caps, and the Russell 2000 continues to beat to the upside with some conviction today with this move, almost a full % up. What also joined the party was crude oil. After the inventories data came out, as we had noted this morning, the EIA report came out, draw on crude. 4.7 million barrels was drawn from the storage. Again, third consecutive week of a draw, and you're starting to continue to see the impact of the weak dollar. This has been a big catalyst. Crude up 85 cents. We also saw that the gasoline stocks, stuff you put in your vehicle, up drawn 4.2 million barrels were drawn there. Watch the gas prices, and that was good for a move to the upside. We also saw Brent, which is primarily pumped out of the OPEC nations, moving to the upside. You had gold, though, firm up. It looked like it was going to get weak. It challenged that 20-day moving average at 1234, bounced and finished the day right below its 50-day moving average at 1243. Watch gold closely, especially with this weakness in the dollar and the move in the bonds. You got to watch this very closely. The non-ferrous metal copper, watch this one as well. Seeing some weakness here in copper, trading at 270. It's down today, basically almost 2 cents. It doesn't seem like a lot, but if this metal starts to move to the downside, that could be a yellow or potential red flag, not only in the materials sector, but also the infrastructure sector. There's a lot of uncertainty here, especially in the States, of whether or not there's going to be any passage of anything that the Trump agenda has. And so I'm going to watch copper as a good barometer of how that's going, other than the obvious biased headlines, whether it's whatever. I can't even talk about it anymore. Speaking of bonds, TLT, the hybrid between the 10 and 30 year, finished slightly up today, up a nickel. What's surprising is that even though we're at all-time highs, we're not seeing bond prices come down precipitously. As a matter of fact, we're seeing them hold up, finished above its 20 and 50-day moving average. You're seeing bonds and equities going up, folks. You're seeing the 2-year, the 10-year, and the 30-year all up in price. That's telling you that if you look at the yields, like the 10-year yield, it was down 3 points, down at 227. So you got 2.27% on the 30-year. This is not the relationship that you would think if everything was just hunky-dory positive. I'm not going to try to explain it away. The market is strong. Earnings have been solid. So far, this earnings season has been one that's been full of some positive affirmations, not only on what has occurred, but what continues to look like it's, as far as the 2017 remainder fiscal outlooks are pretty solid. But I have to tell you, it is a little bit of a bizarre world. Some names that are reporting after hours: Qualcomm. Qualcomm, haven't seen, they're slipped after their earnings. You can see down here that the shares slip after earnings release. Haven't seen what the earnings are, but you can see that the stock's trading down $1.83 after hours, down 3.22% for Qualcomm. Alcoa, which was one of the darlings, we did see that Mittal earlier today, which is a steel producer, was up in France this morning. We could see that Alcoa is held up at 36.50. Been a nice move to the upside. Going to watch this one real closely. It's down a penny after hours. Haven't seen their earnings yet, but they're announcing right now down a penny after hours post-market going into the earnings announcement. We'll watch this one very closely. And also Philip Morris. Philip Morris was up $1.98 today, trading at 121. This tobacco stock, the Otero Group, it's been moving to the upside. There could be a little bit of a quest for yield. When you don't see the bonds moving to the upside as far as yield's concerned, in other words, the 10-year keeps dropping below 2.3%, stocks that have high dividend yields like a Philip Morris, plus the capital appreciation, and remember, it's been in a battle zone and breaking out above its 20-day moving average, there could be some value buyers going in and trying to get some of these value stocks that are also paying some decent dividends. Watch the revenue line in the earnings. Let's see if that moves after hours as well. All right, folks, that's it for the closing bell. I'll be back online tomorrow morning for bright and early. We're going to watch these markets very closely. Join me as we talk about Asia, Europe, the U.S. market open, and I'm going to start putting some strategy pieces together to really clarify how you could do this on your own. All right, we'll see you tomorrow. Have a good night.